Hi friends, my name is Sarvan Kumar, your economy faculty. Welcome to Rathod's IAS Economic Weekly Series. Guys, in this week also, a lot of current affairs have appeared in your various newspapers like Indian Express, the Hindu Business Line and etc. So, all these topics are we going to discuss in this Economic Weekly session. So, without wasting any time, let us see the first topic. Jayant Verma, the member of Monetary Policy Committee of the Reserve Bank of India, who has been opposing RBI's accommodative policy stance. Right? So guys, this is all about this particular context. Now, before we discuss about this thing, let me give a brief perspective of what is this monetary policy is all about in a simple detail. See guys, we all know that in our statics we have discussed that these savings in an economy is considered as an investment. The savings in the banks is considered as an investment. Now for your understanding, let me give an example. See, imagine if a bank gives loans, if a bank keeps the interest, imagine this is the bank. Imagine this is a bank. Now if the banks keeps its interest rates very low, then what is going to happen? Then the people going to the banks and they are going to have the loans taken from it. Say for example, these are the two entrepreneurs who took the loans from the bank. And with that loan they have taken, they have constructed two factories. Now in these factories, they are going to provide employment to the people and see, imagine these are going to provide employment to these people and these people are also going to receive salaries from that particular factory. Imagine this is a cloth manufacturing factory and this is a food manufacturing factory. These people will work here and receive the salary and will demand the food produced in this particular factory. And these two guys will receive the salary from the food manufacturing unit and they are going to use that salary to demand the cloths manufactured in the cloth manufacturing company. Remember, here you need to observe two important things. One, the people is getting employment, right? With that, their standard of living is increasing. Both these people are receiving an employment and also the factories are producing the goods. We all know that the monetary final value of the goods and services produced in an economy in a particular year is called its GDP. So automatically, imagine if this bank is not going to provide that loan to these particular persons, they are not going to set up these kind of institutions or factories, and if they don't set up it, these kind of goods are not produced because the people won't get employment opportunities. Remember one thing here, if they get employment opportunities only, then only they can demand the goods produced in the factory. Imagine a situation. With some money, you have established a particular manufacturing company. And if there is nobody in the market to purchase those goods which are manufactured in your manufacturing company, then what is that? What is that situation? That situation is called market failure situation. If there is nobody in the market to purchase the goods which is produced in your manufacturing company, then we call such situation as market failure situation. Now, it is not only important to provide loans by the bank to these particular guys, and also they should provide employment opportunities also. Then only the persons will receive salary and they are going to demand the goods, right? If at all, even though you set up a factory over here, if the people don't have enough income and salary, then how they are going to purchase the goods and services in that factory? This is called market failure situation. So in order to avoid that, in order to make the people to purchase the goods produced in the factories, right, we also need to generate employment. So in such a way, the employment will be created. The produced goods will be demanded by the people with their salary. In such a way, the economy of a particular country will get developed. Economy of a particular country will develop with the amounts. Now you need to understand one more important thing. All this happened just because the banks are keeping their interest rate at a minimal level. Now imagine another situation. Now if the bank reduces the interest rate further, now what is going to happen? Usually, imagine it in a layman terms also, guys. You can imagine it in a layman term. Say for example, if somebody hears that a particular bank is providing a loan at a very cheap interest rate, definitely many of the people is going to go to the bank and they are going to have the loans at a cheaper interest rate. Now if more and more people go to the banks and if they get the loans, they have a lot of money available in their hands now. If the interest rate is very low, then the people is going to go to the bank and they are going to have that loans. Now the people have, now imagine the situation that the people have a lot of money with them. Now, if the people have a lot of money with them, they are going to demand more goods and services. We all studied in our basics that according to the demand and supply theory, if something is demanded more, its prices increases. So with the more money available in their hands, if the people demand more goods and services, the prices will increase. And try to understand the paradox here. On one hand, the banks need to provide the money. The banks needs to provide the money in order to ensure the growth of the economy. On the other hand, it should not provide more money that the prices get inflated. There should be an equilibrium. There should be a balance need to be ensured between these two. How much money need to be ensured? So there should be an optimal money level in the market. Try to understand. Availability of money in the market is very much essential in order to ensure the growth of the country, in order to propel the GDP of the country. But on the other hand, if at all, keeping in mind, if more and more amount is disbursed, more and more money is put in the hands of the people, then definitely it is going to inflate the prices of goods and services, which is not good for economy. So we need to maintain the stabilization of the prices as well as we need to ensure the growth of the economy. Then what is the optimal level of money that ensures both the growth as well as the prices stabilization? If money need to be reduced, more money need not to be spent by the people in their hands, and at the same time, on the other hand, an optimal level of money is also required for the growth. So in order to ensure both the growth of the economy, in order to maintain the stabilization of the prices, there should be optimal minimal level, which is ensured by the monetary policy of RBI. I am saying money is required for the growth of the economy, right? This is the case 1. And also other hand, there should not be more money in the economy, which is going to increase the prices of the goods and services. This is case 2. Then comes the question, what would be the optimal level which ensures both the growth as well as maintains the price stabilization? It is ensured by the monetary policy by the RBI. I hope it is very clear, right? Next. So this is about the monetary policy. Now, let's come back to some basics, right? The monetary policy is a policy of Reserve Bank of India that deals with the interest rates, money supply, availability. How the banks is going to ensure, how the RBI is going to ensure the interest rate reduced or interest rates increased? This is by using its various tools available with it, like repo rate, reverse repo rate, market stabilization scheme, and there are a lot of tools available with the RBI, like both quantitative tools as well as qualitative tools, right? So both qualitative and quantitative. We have discussed about it very clearly in our basics, right? So to put it simply, monetary policy means the use of monetary instruments like repo rate, reverse repo rate, market stabilization scheme under the control of RBI to regulate the magnitude of the interest rates, so that the money supply and availability of the credit is at optimal level, which ensures the economic growth as well as maintains the price stability. See, here if the interest rate, the RBI is going to ensure an optimal interest rate, so that these people, the entrepreneurs, will get the money to start the businesses, as well as the people also get the money, but it is not at a higher money, but they are not going to receive a lot of money. They will receive an optimal money so that the prices will be stabilized as well as growth is propelled, right? This is ensured by RBI through its monetary policy, right? So when we look at the objectives of the monetary policy, the primary objective of the monetary policy in India is to maintain price stability while keeping in mind the objective of the growth. I hope everybody understood this point right now by this slide. Price stability is a prerequisite for sustainable growth. We all studied it. So in order to maintain price stability, inflation needs to be controlled. So on one hand, inflation, the price stabilization need to be maintained, but on the other hand, the growth need to be propelled. So what would be the optimal level will be decided by RBI through its monetary policy, right? Now, how will the government is going to ensure that interest rate? It have a lot of tools available with it, both quantitative tools and qualitative tools. So, see, monetary policy tools includes both the qualitative measures as well as quantitative, like repo rate, reverse repo rate, and we do have different kinds, right? Next, a monetary policy might be expansionary and contractionary monetary policy. Expansionary or accommodative monetary policy, this is one and the same, there are synonyms. An expansionary monetary policy is focused on expanding, increasing the money supply in an economy. How they increases the money supply in the economy? Expansionary monetary policy is implemented by lowering the key interest rates, thus increasing the market liquidity. If at all the banks reduces the interest rates, then the people definitely going to get the loans from the banks. Then if the people get the loans, they will have a lot of money available with them. In such a way, the RBI is going to ensure more and more liquidity and money in the market. Reverse is the case of contractionary monetary policy, when the interest rate is high and all the amounts, and the people reluctant, the people feel reluctant to have the loans taken from the banks, right? See, now as far as the mandate for the Reserve Bank of India to conduct this monetary policy is concerned, the Reserve Bank of India is vested with the responsibility of conducting monetary policy under the RBI Act of 1934. Under the RBI Act of 1934, right? Recently, see, there are a lot of changes. See guys, you need to remember one more important point here. Currently, we are following a flexible inflation targeting. See, up to now, we are talking about an optimum level of interest rate, so that both the growth and as well as these price stabilization is ensured in the economy. Now, what is this optimal level of money? See, the government, the RBI is going to fix the key interest rates like repo rate and reverse repo rate, so that the inflation rate should not decrease below 2% or it should not increase above 6%. So that is 4 plus or minus 2. The government will pump money into the market. The government will reduce, the RBI will reduce the key interest rates like repo rate and reverse repo rate. If the interest rate is reduced, definitely the banks are going to give the loans to the consumers at a cheaper interest rate. It will continue until the inflation reaches 6%. If the inflation reaches 6%, then RBI again increases the interest rates. RBI again increases the interest rates, then the money supply will be decreased. So the inflation would come down again. It would ensure the hiring the interest rates to at a level that it should not fall below 2%. So in such a way, the RBI is going to ensure the key interest rates that inflation should not cross the 6 and as well as it should not go below 2%. This is the optimal level decided by both the government and RBI to ensure both the growth as well as price stabilization in the economy. So I hope it is very clear for you right now. Next. See. The central government has notified 4% consumer price index inflation as a targeting. So in the statics, we have discussed about the CPI inflation. What is this inflation is all about, and in the previous classes also we have discussed about the inflation. So please do check that particular classes. For the period from August 2015 to March 31st, 2021, it's still continuing with the upper tolerance limit of 6% and the lower tolerance of 2%. This is called flexible. It should not be below 2. It should not be above 6. It should be between the 2 and 6. Right? So factors that constitute the failure of the achievement of inflation target, like the average inflation is more than the upper tolerance level above the 6. Right? It should be a below. When the inflation rate of an economy goes above the 6% or it falls below the 2%, then it is considered as a failure of monetary policy particularly. Right? Next. There is no kind of a punishment or such, but the RBI should provide some kind of a documentation for the government regarding the procedure that it is going to take to ensure the inflation at a normal level over a period of time. Right. The RBI Act, the framework aims at setting a repo rate based on an assessment of the current evolving macro situations. It is done by the RBI. These are the statics, right? As far as the open market operation, As far as the Monetary Policy Committee is concerned, now in India, the policy rate required to achieve the inflation target is decided by the Monetary Policy Committee. These are the very much important facts you need to remember from your UPSC perspective. The Monetary Policy Committee is a 6-member committee constituted by the central government under the RBI Act of 1934. The MPC is required to meet at least 4 times a year, and the resolution adopted by the MPC is published after the conclusion of every meeting of MPC. MPC is the main body, Monetary Policy Committee. So as far as the composition of this Monetary Policy Committee is concerned, often UPSC also asks about these kind of compositions. So the governor of RBI is the chairperson, is the ex officio person. Whoever becomes the governor of RBI is automatically going to become the governor. Automatically is going to become the chairperson of this particular Monetary Policy Committee. So this is the deputy governor of RBI is going to be in charge of the monetary policy. So in such a way, we have this particular composition of Monetary Policy Committee. Just you need to go through it. Next, we have the monetary policy process. The Monetary Policy Committee determines the policy interest rates required to achieve the inflation target. I said it is the optimal level which ensures both the growth as well as it is going to ensure the price stabilization. You need to keep it in your mind. The key repo rate is called repo rate. The Financial Market Operations Department operationalizes the monetary policy. These points are very much important. You need to remember. The Reserve Bank's Monetary Policy Department assists the Monetary Policy Committee in formulating the monetary policy. These kind of facts are very much important for your UPSC prelims particularly. Right. Next, we have the Financial Markets Committee. It meets daily to review the liquidity conditions so as to ensure that operating target of the monetary policy is kept close to the repo rate, key policy rate. So you need to be very careful with respect to these kind of committees. UPSC might ask these kind of committees. It has a history of asking such kind of questions. As far as the monetary policy report is concerned, the MPR is published by the Monetary Policy Committee of RBI, and the MPC is a statutory and institutionalized framework under the RBI Act of 1934 for maintaining price stability while keeping in mind the objective of growth. That is the main objective, maintaining the price stability and also the growth, which will be done by ensuring a particular level of inflation between 2 to 6%, so that both the growth as well as the price stabilization will be ensured. Right? I hope it is very clear. So this is all about the monetary policy, and I hope I have cleared the basics for you and as well as the current affair. Next, we have the next important current affair. Recently, RBI went for $5 billion rupee swap. See, the Reserve Bank of India has conducted a $5 billion rupee swap auction as part of its liquidity management initiative. Right? What is this rupee dollar swap, or what is this currency swapping? See guys, simply means here we are discussing about the dollar rupee swap, which is done by the RBI, the central bank of the country. It is a forex tool whereby the central bank uses its currency to buy another currencies. So this is the meaning. It's a forex tool whereby the central bank uses its currency, its own currency like domestic currency, to buy the another currency like dollars. In a dollar rupee buy or sell, the central bank buys dollars, US dollars, from the banks in exchange of Indian rupees and immediately gets into an opposite deal with the banks of promising to sell the dollars at a later date. See, now we have a lot of dollars in the economy. Now RBI, what it is doing, it is giving the domestic money, rupees, to the banks, and it is buying that money. You need to understand one thing here. If the RBI does the same thing, the RBI is ensuring, if RBI buys the dollars by giving the rupees, then automatically RBI is trying to maintain a lot of rupees, availability of money in the domestic market. Right? See, I hope the meaning is understood by you. The forex swaps helps in liquidity management. This is called the management of liquidity. Whenever there is, see, I said you it should be ensured between 4 plus or minus 2. Now, if the inflation is decreasing, for example, it is decreased to 3%. Now, it can be ensured up to 4%, up to 6%. Then, if RBI decides that more and more money supply can be pumped into the economy, then these kind of actions and management things can be done. Right? It also in a limited way helps in keeping the currency rates in check. Right? See, RBI resorting to selling these US dollars in 2 tranches while keep a check on the rupee volatility and help curb depreciation to some extent. right? This is the main purpose of it. See, so this is about the RBI's dollar swapping, RBI's rupee and dollar swapping. Next, we have another important thing here called predatory pricing. See guys, remember, the Competition Commission of India has dismissed allegations of predatory pricing against e-commerce platform called Shopee. You need to understand one thing here. What is the meaning of competition? What are the advantages a particular person gets while having a competition in the economy? I am talking about the competition in the economy, but I am not talking about the competition in our exams, right? Particularly, see. Guys, imagine a situation. Now, if, see, for our daily purposes, say for example, early in the morning, we need this product, toothpaste, to brush our teeth, right? Now, imagine an economy where there is only one manufacturing company, toothpaste manufacturing company in that particular economy. Now, what are you going to do? At any cost, you need to brush your teeth early in the morning. So, you are going to buy that toothpaste at whatever the price they are going to fix and whatever the quality they are going to give you. You don't have an option because there is only one factory in that particular economy which is producing these toothpastes. So, you don't have an option. You need to buy that particular product at whatever the price they fix, and you also need to buy that at whatever quality they give you, right? This is the situation. Now, what if the government allows more and more toothpaste manufacturing companies need to be established, allowing them to be established in an economy? Now, imagine another toothpaste manufacturing company is allowed to get established. Now, this is producing X toothpaste company, this is producing Y toothpaste company. Then definitely, if the Y toothpaste, this person wants to sell his toothpaste to the consumers, then what he is going to do? He is going to fix the price of that particular toothpaste at a very low level when compared to the X, right? And he is also going to ensure the quality. We all know that a consumer like us needs both the quality product as well as it should be cheaper enough. Then definitely this particular Y product, Y toothpaste is going to be purchased by the consumers. So, in such a way, this is we call the competition in an economy. So, in such a way, if the competition is ensured in the economy, the ultimate consumers like you and me is going to get the goods at a cheaper rates as well as at a quality. So, in order to ensure that his product sold to the consumers, the new competitor is going to fix that prices at a very low level, and he is also going to ensure a good quality when compared to the opposite. Then only his products got sold, right? So, in such a way, the ultimate consumers like us will get benefited with a quality as well as a lower prices by ensuring the competition, right? This is the meaning of competition you need to remember, right? This is the same, guys. See, earlier we used to have only ambassador cars in the economy. Now we do have a lot of brands like Toyota, Suzuki, in such a way we do have different kinds of brands. Earlier we used to have only this kind of a DD channels. So these days we do have a lot of channels and we have OTT platforms. See, in such a way, by ensuring the competition, ultimately the people like you and me, the people like consumers like you and us is going to get benefited. See, as far as the current affair is concerned, the Competition Commission of India, which is the main institution in the country to ensure this kind of competition prevailing in the economy. Remember guys, see, when this guy is already established, if at all a new company like this company is trying to establish his toothpaste manufacturing, this guy will already have a lot of presence in the market. He will have a strong economy. He will have a strong people, right? He have a good influence in the market. So there are chances that although a free economy, he might monopolize that particular industry, particular toothpaste manufacturing sector. So in order to not to happen such kind of things, the Competition Commission of India will ensure that even this white toothpaste manufacturing company can establish his factory and also produce the goods. This is done by the Competition Commission of India. So, it dismissed the allegations of predatory pricing against an e-commerce platform called Shopee. See, what is this predatory pricing? Predatory pricing is the illegal act of setting prices low to attempt to eliminate the competition. Say for example, see, imagine a normal product is priced at 100 rupees. Now there is a new factory which is established. Now if this new factory is going to fix the prices of that particular 100 rupees worth of good at 1 rupee or 10 rupees, we call such kind of a pricing as predatory pricing. In the initial phases, definitely all the consumers, instead of 100 rupees, is going to buy at 1 rupee and 10 rupees. Then these guy will, over a period of time, will shut down the market, will shut down the production, because nobody is buying his particular product. Then what this guy is going to do is, now he is going to make that particular product priced at 200 rupees over a period of time. Now in such a way, we call that kind of a pricing as predatory pricing. I hope you understood it. So predatory pricing is the illegal act of setting prices at a low level in order to attempt and eliminate the competition. So predatory pricing violates the antitrust laws, as it makes the market more vulnerable to a monopoly, right? See, as far as the competition, this is the Singapore-based company which tried to sell those products at a 1 rupee and 2 rupees and compare it to the rest of the competitors in order to capture the market. This is called predatory pricing. We should not done it. See, imagine I have a particular manufacturer. Say, for example, in this locality, see the same example. Imagine a guy is selling a cloth at 100 rupees. Imagine I went there and altogether I opened a shop and I am now selling it at 10 rupees. Now nobody is going to purchase this 100 rupees good, and they are going to same level, the same quality of good at 10 rupees. Then what is going to happen? This guy is going to shut his shop down and he will move off from there. Then what this guy going to do is, he is going to price that, he is going to fix that price of that particular good at 150 rupees or 200 rupees. Right? Now there may be a situation that a new guy again comes and he might price it at 50 rupees. In such a way, the predatory pricing goes on. Right? I hope you understood. So in order not to happen all these things, in order to ensure competition, and in order to ensure that these kind of predatory activities is not taken up by the companies, we have an institution called the Competition Commission of India. So the Competition Commission of India is established by the Competition Act for the administration and implementation and enforcement of the Act. See, the chairman and members are appointed by the central government. As far as this Competition Act is concerned, earlier, guys, when we discussed about the industrial policies in our static syllabus in the economy, there we have clearly discussed about this Monopolies and Restrictive Trade Practices Act of 1969. Right? If at all you have confused, just do visit the classes again and try to have a brief recap of what we have discussed. So earlier, in order to ensure this, see, the name itself suggesting Monopolies and Restrictive Trade Practices Act, in order to ensure the competition and in order to prevent the companies to monopoly, and in order to prevent the companies to indiscriminately acquire the shares of the other company, own the other company, these kind of Monopolies and Restrictive Trade Practices Act was enacted. This was replaced by Competition Commission in 2002. Right? Earlier we used to have a Monopolies and Restrictive Trade Practices Commission, and it is replaced by the Competition Commission of India, and we have an act called 1960 MRTP Act, and it is replaced with Competition Act of 2002. Often UPSC asks these kind of questions. MRTP is replaced with which act? MRTP Commission is replaced with which institution? Right? Which institution is responsible for ensuring competition in the economy? Who benefits by the competition? The ultimate consumer, which ensures quality as well as prices, will get benefited with the competition. So what is the definition of competition? What is the definition of predatory pricing? Who prevents them? Competition Commission of India. So in such a way, you should analyze, you should keep these things in your mind, repeated and revised. So this is all about this Competition Commission. So the functions of the commission: so to eliminate the practices having adverse effect of the competition, to promote and sustain competition, right? Protect the interest of the consumers, to ensure freedom of trade in market. So this is about the Competition Commission. I hope you understood it. Next we have a stagflation. Now guys, let me give an example. So first of all, what is the meaning of stagflation? See, reports, see, you all know that the Russia and Ukraine crisis is going on. USA have banned the Russia's oil. USA have banned the Russia's oil. We don't find the Russian oil being sold in the US markets and many of the markets in the world. You know that whenever a US imposes a sanctions, it is not that only economy that USA is going to impose the sanctions. It is all the whole world. See, when USA impose the sanctions, the NATO is going to join. right? And all these friendly countries, those countries which have a good economic relations with the USA, definitely they are going to obey these particular economic sanctions. So you need to remember that when USA imposes sanctions on any particular economy, it is not that only USA, but all the countries which have the trade relations with the USA is going to impose that kind of restrictions on the particular country, right? It is not only that US only imposes the restrictions, even India can impose the restrictions, like India is going to impose, India can impose these kind of economic restrictions on any particular country, right? This is the meaning of imposing sanctions. I hope you understood it, right? Stagflation, it is, see here when we look at the context, reports suggest that the crude oil prices soared and touched almost 140 per barrel mark amid Russia invasion of Ukraine. This has posed a risk of causing stagflation in India. This is the context. This is the thing which is going on in the economy. Right guys, see, we all know that the Russian economy, mostly the Russian economy these days are driven by selling this kind of a crude oil to the world countries, and they are selling some kind of equipment to the defense equipment for the other countries such as this Sukhoi fighter jets, and they are also going to sell this air defense systems like S-400. This is the major source of income for the Russian these days. Although as far as the defense is concerned, Russia is a big country. As far as economy is concerned, it is very low, right? It is not as high as a USA. As far as defense is concerned, it is good, right? So it is said that with these kind of situations, there might be a stagflation kind of a thing in the economy. Experts is expecting that, right? See, what is a stagflation? Stagflation is a situation where the stagnation and inflation exists in an economy. Stagnation means low national income, growth and high unemployment rate, right? It is a situation where the stagnation and inflation exists. Stagnation and inflation exists. See guys, so what is an inflation? So now let us try to decode the things, right? Let us try to decode the things. Now imagine a situation. See, imagine there are two guys. There are two guys in an economy. No, sorry. There are five guys in an economy. Now these five guys are consuming five goods. These five guys are consuming five goods produced in the economy. Now with the accommodative monetary policy of their central bank, or when the interest rate is reduced in that particular thing, or not only interest, they have then more money. They have the more money. During such situations, they have the more money. When they have the more money, instead of demanding the 5 goods, now they are going to demand 10 goods. When the people demands more and more goods, then automatically the prices of that particular good, the prices of goods increases. When the people demand more and more goods, the prices of the goods increases. We call this demand pull inflation. And next we have, we all know that the transportation is one of the important factor in the value chain of the goods. This transportation sector is mainly dependent on this crude oil prices. Whenever the crude oil prices, definitely transportation cost is also going to get increased. When the transportation cost increases, automatically the prices of the goods also increases. We call these kind of things as inflation. These are the main factors for the inflation in the economy. Now, whenever there is imagine earlier there are 5 goods, now there are 10 goods being demanded. Now this extra 5 goods need to be produced, right? These people are earlier demanding 5 goods and now they are demanding 10 goods. So extra 5 goods need to be produced in the economy. In order to produce the extra 5 goods, we need to set up industries, isn't it? Earlier with one industry, we are producing 5 goods. Now, in order to produce that extra 5 goods demanded in the economy due to demand pull inflation, we need to set up another industry and we need to produce 5 more goods. We all know that more and more goods, earlier, imagine the price of the one good is 10 rupees, this is 50 rupees is the economy of that particular country. Now the 10 goods are produced and sold, so 10 into 10, 100 rupees. So imagine during an inflationary situation, how the GDP of the country is increasing. Now exact opposite, so that's the reason why economic experts also says that a minimal level of inflation is very much required for the growth of the economy. It is not a higher level of inflation rate, but it is not a lower level of inflation rate, like a minimum of 2.5 to 3% of inflation is good for the economy. So in such a way, the growth can be driven. This is why the expert says that inflation, a minimum level of inflation is required. Now, exact opposite to it. See, on one hand, this kind of, on one hand, the inflation is existing in the economy. But if the inflation is existing, according to the theory which we have said, there should not be stagnation, there should be growth. See, from 50 to 100, see, the growth is increasing. These kind of things should not be happen when there is an inflation. But exact opposite to it, when there is a stagnation in the economy, where in spite of inflation, when the prices of the, when the growth of the goods and services is falling, we call it as a stagnation. And see, this is called stagflation. With the inflation, the growth should be propelled to a certain extent. But with the inflation, if the growth stagnates, if the two situations, both the inflation and the stagnation happens in a single economy in particular period, we call it as a stagflation. I hope you understood. With the inflation, so in such a way, more and if five goods need to be produced. So if the more and more goods produced, we all know that final monetary value of goods and services is called GDP of that particular country. So in such a way, the growth propels with basic inflation. But here what is happening? With that inflation, the growth is not propelling, it is stagnated. Stagnated means stop. So when such kind of a stagnation and inflation exists in a same economy in a particular period, we call stagnation. This might happen due to these particular things, due to the price increase in the crude oil prices. When the crude oil prices increases, then automatically the transportation is going to get effect. Then definitely the prices of the goods and services is going to increase. It creates the inflation in the economy. On the other hand, when the goods and services, see, if the people don't demand these kind of goods and services, they are not produced, then the economy goes into the stagnation. So these kind of situations might come due to this kind of Ukraine and Russia's conflict. So this is what expecting by the economic experts. The same, this is not a first phenomenon, guys. So the best known case of stagflation is what happened in the mid 1970s. This already happened. The OPEC, you all know about the Organization of Petroleum Exporting Countries. We all know about the OPEC, which works, it is going to control the supply. See, this sent oil prices soaring across the world. They went up to almost 70%. During that situation all over the world, we can see in many countries this kind of stagflation. This is about this stagflation. Recently, the government came up with a UPI 123 pay. See, we all know that with the smartphones, we can scan the QR codes and we are directly sending these payments using UPI payments for the rest of the transactions. So what about the feature, this smartphone, the people who is not using this kind of a smartphone? Imagine a person who is using the feature phone, like a old parent. Now for them, this 123 pay is going to help to have their transactions. I hope this is about 123 pay. And the last one, we have this National Land Monetization Corporation. What is the meaning of monetization? Monetization is something which, by using the unused thing, we are going to earn some revenue. If we have a land which is unused, we have to clean it and we are going to give it in lease. We call such things as land monetization. Utilizing something and generating revenue out of it which is not currently used is called monetization. Simply, now recently the Union Cabinet has approved the setting up of a new government-owned firm, National Land Competition Corporation, for pooling and monetizing sovereign and public sector land assets. The National Land Monetization Corporation is being formed with an initial authorization capital of 5,000 and paid up capital of 150. We also discussed in our capital market in our classes what is the meaning of this authorized capital, and we also discussed about what is the meaning of paid up capital, right? The government will appoint a chairman to the head of this monetization through a merit-based selection process and hire private sector professionals with expertise. Right? The NLM will undertake the monetization of the surplus land and building assets of the central public sector enterprises as well as government agencies. These days, not only the state governments, guys. Recently, the government of AP is also came with the same kind of an initiative. Now, the central government is also going to have these kind of initiatives, and a lot of states are coming with these kind of initiatives. You might have practically observed that there might be a lot of unused lands and buildings with these kind of public sector offices. Like you might have observed in your MRO office, go to your village and you can observe these kind of a things. So these kind of a public assets and public lands can be monetized. So in order to do it at a central level, we have this kind of institution, right? So this will speed up the closure process of central public sector enterprises and smoothen the strategic disinvestment process of the government owned CPSEs. Right? We also discussed in what is the meaning of this disinvestment in our static classes. So this board will comprise the senior government officers and eminent experts, while its chairman and non-government directors will be appointed through merit-based process. The corporation will have a minimal full-time staff hired directly from the market on contract basis. So as of now, this is the meaning. The UPSC is going to ask you primarily about what is the meaning and definition of monetization particularly, and they are going to ask you about this kind of what is this National Land Monetization Corporation. So for the current affair is in transition, and I think in future we are also going to again have this kind of current affairs in our classes, where we are going to have a detailed discussion with respect to these things. So these are some of the important current affairs appeared in the week of the second week of the March. So guys, in the next economic weekly session, see, we are going to discuss these things. See, the Russia-Ukraine crisis and their impact on the Indian economy, all these kind of more and more comprehensive current affairs we are going to discuss in our next classes. So as I promised, we are going to discuss both the static as well as current affairs in our classes. I hope you understood and enjoyed this class. Thank you and stay tuned to Rathods IAS.